Hey everybody, how are you doing? Hope you had a nice day today. In the video that I did yesterday, I hope you were able to catch it. It was sent out in an email this evening. In the video that I did yesterday, we talked about a failure pattern that I absolutely love using, trading, when the stock is basing. In tonight's video, I'm going to share with you the pattern that I love trading when the stock is not basing but rather pulling back. As we know, as some of you might know, stocks can only correct through either time by going sideways or through price by pulling back. In yesterday's video, we talked about correction through time. Today, we're going to talk about a pattern that I absolutely love when the stock corrects through price by pulling back. I'm an accountant by trade. I like to categorize things and put them in boxes and figure out specific patterns and for example, for the afternoon session, for trading the afternoon session, I have 8 patterns that I trade. 8 specific patterns that I trade. Today I'm going to share with you my second favorite of those 8 patterns. For trading, for swing trading, I have 7, well, it's 6 plus 1 strategies that I do, right? I'm actually going to be doing a class, a brand new class about the 6 patterns that I trade during that I swing trade during earnings season. If you're interested, I'm going to be teaching that class on Saturday, this Saturday, the 12th at 9 a.m. Click on the link to learn about the 6 patterns, the names, and some information about them, but also to learn about the class. The link is in the description of the video. With that said, let's go ahead and get started. The pattern that as you can see perhaps, the pattern that I trade is called the W pattern. It's when you have a stock that pulls back, right? You get the pullback, but it doesn't go right away. It triggers, but it doesn't go all the way back up to the highs. It actually hesitates a little bit. In fact, instead of showing you this, maybe I ought to show you a real chart first. So let me do that. How about this? BKS today. That's a W pattern, but it's not a W pattern, it's an M pattern, right, with a lower high. So it didn't go right away. It needed the additional setup for it to actually get going and then drop right to target. And this was a trade that I took myself today, except I couldn't get filled on it very much at all because it was on an uptick. So let's go back to the slide that I was showing you and read. This is a W pattern with a double bottom. 15-minute, because in the afternoon I trade the 15-minute chart. I focus exclusively on the 15-minute time frame. It's because it's not too small a time frame where you get sucked in by the noise, and it's not too large of a time frame like the hourly time frame where by the time the play triggers and gets going, the day is over. So the 15-minute time frame is the perfect time frame for trading the afternoon session, anytime after 12 o'clock. So this is the pattern description. This is a 15-minute chart that has triggered a buy setup. The buy setup would be right here. Trigger the buy setup, but is not ready, wasn't ready to go yet, either because the retracement was too steep, the price was extended, or the stock was maybe waiting on the market. The healing process, or the correction, anytime you have a correction, you're basically shaking out the weak hands, and that's what I call the healing process. Happens once the stock puts in a W pattern that sets up the unexpected. The unexpected being that the downtrend fails. Usually you get a downtrend on the 2-minute when the stock is pulling back on the 15. So the downtrend suddenly fails, and the double bottom suggests strength, which brings in additional traders that missed or passed on the initial buy setup. Okay, so let's take a look at the pattern that I'm talking about. I showed you the BKS from today. here's a chart that shows you the W pattern with a double bottom, right? And then from there, I mean, it quadrupled maybe or tripled, right? Same here. You get the initial pullback. The pullback was a little too deep, broke the 20 by a little bit, right at minor support. So it wouldn't have been the right thing to expect it to go right to target. You should have expected a shakeout first, a retest, and if the stock fails to make a new low, right, if the double bottom holds, then that's when you do it, like the BKS today. Here's one that actually formed on a gap recently, where the stock pulled back really hard. Notice the first bar was a wide range red bar, so that's really bearish. When I see a pullback that's started from a wide range red bar, I don't do the first buy setup. I only do it on the next entry. Notice the second entry had narrow range bars. Explosive moves mostly come from narrow range bars. Look at any big move you can see on any chart you want. The vast majority of them are going to come from either narrow range bars or wide range bars, one or the other, the vast majority. Now the W pattern doesn't just happen with it doesn't set up with a double bottom. Sometimes it comes with a higher low. It's the same idea, but with a higher low. The entry would be right here, and or depending on the size of the stop, over the neckline. So it would be right here long over the last bar's high, and then over the neckline. So let's take a look at some examples, and maybe we'll go to some live charts. This is exactly like the BKS that I showed you, except it's an M pattern and it's a lower high. So that would be the entry. Now, why would you have wanted to pass on the first entry? Because the first entry is always the most aggressive. You don't have to pass on the first entry if it's picture perfect. For example, if you get something like this, check this out. Just a picture perfect buy setup, right to support, rising 20, 40 to 60% retracement at 1:30 reversal time. Perfect, right? Picture perfect. You don't have to pass on it. You just play it above this bar's high, and then the stop would be right here. The problem is, the vast majority of the time, the pullback isn't picture perfect, and you have to pass on the first entry. And today, in this video, I'm sharing with you how to do it on the secondary entry. So if you pass on it on the first entry and it actually works, you don't give up on it. You can actually try it on the second entry. In this case, in the form of a lower high, an M pattern with a lower high. Here's a W pattern with a higher low, right? Same thing. So in this case, the entry would have been right here and or right here. You could also do half and half. The good thing about doing half and half, getting in with just a half and then adding more as the stock goes in your favor, well, you get more confirmation. And then you actually go full share size once it breaks the neckline. So you don't get the tightest stop, but you get more confirmation. So it's beautiful. I love doing half and then going full when the stock confirms. Does that make sense? Now, if you feel confident about it, the daily maybe looked perfect, then you don't need to do half and half. You can just get in all at once on the first entry. Again, a W pattern with a higher low. Notice here, why should you have not taken the first entry? Because it broke under the low of the day. It was far away from the 20 MA still, right? That's not the type of entry that you'd want to take a shot at unless it actually works and then gives you a secondary entry. The secondary entry can take the form of a base, right? And then a base breakout, can take the form of a double bottom and giving you a W pattern with a double bottom, or it can take the form of a W pattern with a higher low. And in this case, it also printed the battle bar, which is my favorite bar, reversal bar of all time. So that's what it did here. So that's the W pattern with a higher low. Notice the W pattern with a higher low, and then the transition. This was a transition. I really, really like it when the 20 MA curls and captures, halts, H-A-L-T-S, halts the stock from continuing lower. Look at the move. Look at that move, right? Beautiful on a professional gap on the daily chart. Now, this, I'm sharing with you one of the 8 patterns that I honestly teach in the advanced scalping techniques seminar. It's one of the 8 patterns that I teach. Um, so it takes, I'm just going to do it in a matter of 10 to 15 minutes. If I want to go over this in detail, it would take me probably 45 minutes, maybe an hour. So I'm just giving you kind of just a taste for one of the patterns that I really, really like. It's actually my second favorite pattern of all time on the 15-minute chart. And it's either the M pattern or the W pattern, depending on whether you're playing long or short. Here's an M pattern with a lower high, right? And then look at the daily chart to the right, gap down, ended the long-term uptrend. Shock gaps and failure patterns set up the unexpected, thus trapping traders. This tends to cause major problems for most ordinary traders, but you guys, T3 live traders, are anything but ordinary. But they can serve as major money-making opportunities for us. In other words, we are always prepared to profit from a stock's failed attempt to do something highly expected by the majority. And that's what gap trading is all about, is doing something that is, taking advantage of something that shocks people, that traps people, right? That's highly unexpected. Now, the W pattern or the M pattern can also come with a shakeout, or you can call it a lower high, a lower low, when it breaks under the prior low. Let me just show you an example. See this? That was basically an M with a shakeout. So it doesn't have to come with a double bottom or lower high, double top, lower high. It can also come with a breakout failure or a shakeout. That works too. Now, when that happens, though, you have to learn how to enter on the smaller time frames, because when that happens, it means you got a higher low and a higher high. So it's a violation of the downtrend. So you can't really do it off of this time frame anymore. You have to go to the smaller time frame. Okay, and we're not going to go over that in detail here, but I just wanted to kind of introduce you to the concept. Another W pattern with a shakeout low, right? And then, I can show you more and more, but you get the gist of it, I think. I hope you do. As I said at the start of the video, I like to have specific measurable patterns that are always in the back of my mind. In fact, in the beginning, I printed the patterns that I traded and I put them on the wall in my room, in my office, to make sure before I took a trade, I knew exactly which pattern it was. And if it didn't meet any of the if it wasn't any of the patterns that I had on the wall, I couldn't take it. Now the patterns are in my head, just like, you don't need to have a dictionary. Well, I do maybe on your desk, because you can, it's a language. Once you learn it, you're good. So this is a language, and now it's second nature to me. But in the beginning, I like to have each and every pattern printed with examples of it, and I put it on the wall in front of me, basically. I encourage you to consider doing the same until it's second nature to you. I want to show you something else here. I want to show you, I showed you the BKS, and I want to show you another pattern that I really, really like, but we're not going to talk about it in detail because I have done videos about this pattern, and I don't remember the symbol now. Well, let me look at my PNL. Oh, it's EXPR. It's EXPR. My best. I struggled again today. I mean, look, green, red, green, red, green, red. So I just didn't bat that well, and then more just green, red, green, red. So EXPR, right? Take a look at it. So here it is. What's the name of this pattern? And then the breakdown, and then outs, and then it bounced. So it dropped 15 cents. I had 8,000 shares. Dropped about 15 cents, I believe. Yes, exactly 15. And 8,000 shares. I made 1,100 bucks on this pattern. What is the name of this pattern? Some of you might know it. I would like it if you left a comment. If you type it into the comments section and tell me what you think the name of that pattern is, what I call it. All right. Also, feel free to share with us, share with each other your favorite patterns. This way we can all benefit from each other. All right. Well, that kind of wraps it up for me for tonight. Again, I like to trade specific patterns. In this video, I talked about one of those 8 patterns that I trade in the afternoon session. On Saturday, this Saturday, I'm going to be teaching one of the 6 patterns that I trade earnings season with. If you would like to learn more about it and read about those 6 patterns, click on the link in the description of the video. Hope to see you there. And with that, I am gonna wish you a happy almost Friday. Good night, everybody. Take care.